April 8th, 2024. This is a big triangle that we have forming right here, you can see. And really all a triangle means is it's a contracting range. And you can think of it as like an elastic band that's, stretching. It's going to pop at a certain point, and it's either going to pop to the upside or the downside. I'm not sure which. Could argue maybe slightly more likely it's going to be to the downside. But in general, I think we're going to be stuck in this, range from this high to this low because of the daily chart. We have and look, we have it's triangle. We have an inside pattern. So we have an inside on the daily, which is inherently going to be a triangle pattern on a lower time frame because that's what inside patterns are. They represent triangles. So when you get IIs, things like oops, when you get inside patterns, things like 40 and 41, you can think of it the same way that we have an inside pattern on the daily chart. And look what it did today. We got a breakout attempt and a failed breakout. So a lot of times you might get an attempt up and then a violent reversal down, or an attempt down and a violent reversal up. But the point being, if we open in this range tomorrow, it might continue to contract, but eventually something is going to give and we're going to get a breakout attempt. So, regardless, you just have to be ready for a breakout in either direction. And you just wait for the breakout to start and then trade in the direction of the breakout. Again, it could be in either direction. And when you start to get the breakout, 50% chance the first breakout fails. So just wait for the breakout to start and then trade the breakout, rather than trying to predict what direction it's going to be in. Bar one, a bear bar closing near its low. It's a double top with the prior day, but not really all that great. I'd rather wait. Follow through on two. So technically always in short after bars 1 and 2. Good for the bears, but probably not going too much lower. This is probably a trading range, and generally in a trading range, when the market goes always in short, there's probably going to be buyers. When the market goes always in long, there's probably going to be sellers. Bar 3, a bull bar, but a big tail on the top and a big tail on the bottom. So probably not as good as it could be. And then you get disappointment on 4. It's a lower high from 1 and 2, and it's a low 1 short, but probably not really all that great. I'd imagine there are going to be buyers around a 50% pullback, which you can see there was. Why not directly below 4? Because 1 and 2 is probably strong enough for a second leg down. It would be unusual for us to trade right below this and then get a big reversal up. So probably buyers around the 50% pullback, and you can see there was buyers around the 50% pullback. So we got a rally on 5. 5, it's a double bottom, 3, 5, but big tails. This is a couple of doji bars. I think we're going to be really sideways here, so I don't really want to buy here. I don't really want to sell. I'd rather just be flat. And you can see we got sellers above 5 during 6. We have 4 consecutive bull bars to bar 6, so good for the bulls. But these are not exciting bull bars. These are really small bull bars, so they're really not what you want. 7, a bear bar, but after 4 bull bars, probably not all that good. And what are we testing? The 2 low, right? The bears who sold the close of 2 got trapped on 3, and they probably scaled in higher, maybe above 3, maybe above 2, something like that. And they're now getting out with their first entry around break even and their second entry with profit. A lot of traders probably not really going to be all that interested in holding when we touch that 2 close because of the 4 bull closes from 3 to 6. 8, a bull bar, but a big tail on the top, a big tail on the bottom. Buyers at the 2 low again. And disappointment 9. It's a double bottom, 3 and 8, but really not all that great. I thought if we end up getting some sort of big bear bar here, it would be an okay sell, since 1 and 2 probably made the market always in short, and we never clearly went always in long. And so at this point, what are you waiting for? You see 8, you see 9, bad follow through for the double bottom, and then you get 10. Essentially, just again, it's a smaller triangle, right? So on a lower time frame, or sorry, on a higher time frame, it's just going to be an inside bar or a consecutive inside bar, something like that. So what are you waiting for? Well, you're waiting for something clear. You're waiting for a big bear bar confirming the market is always in short, because we were probably always in short from 1 and 2. So you're waiting for a big follow through bar from the bears. Maybe if, imagine 11 was exactly the same size, exactly the same close, but it was just a bear bar closing near its low somewhere down here. Well, then the market's clearly always in short. We have this, and we never really went always in long in here. So we're clearly always in short. What if, and then obviously 11 closed on its high. So now the market's clearly always in long, or very, very close to always in long. And it's, one of the more clear signals we've had today. So it's a reasonable swing trade to buy above 11. Follow through on bar 12, good for the bulls. Follow through on 13. It's a bit disappointing, but it does close at its midpoint. So I think it's technically still a buy the close bar if it does close at or above its midpoint. Probably buyers not too far below, probably sellers not too far above. 14, an inside bar and a doji bar. So when you get bars like bar 14, you expect that this is going to be a, this was a buy the close rally, but you're expecting the buy the close rally to come to an end relatively soon because you got a doji bar. Generally, when you get a doji bar in a buy the close rally, or you get a doji bar in the sell the close rally, the rally or the sell off is going to come to an end pretty soon. So we have small open gaps. You can see bears who sold above 10 got trapped on 11, never got out at 12. We have this gap. And you can see the important thing, I think, is that the one high is not overlapped by bar 15. So bears, they were trying to essentially get the pullback to touch the one high, because if we touch the one high, that allows the bears who sold that one high and scaled in out around break even on their first entry with a scale in profit. Excuse me. But instead, we got 15, which did not overlap that high. 16, a bull bar closing near its high. I think okay to be long, okay to buy above 16. It's always in long in the bull bar closing near its high. So definitely okay to be long above 16. Followed through on 17, but probably not as good as it could be. And then 18, a disappointing bar, big tail on the bottom. This could be a wedge, 1, 13, and 18. I think bulls will exit below 18. And you can see that's what caused such a big bar on 19. And look where 19 essentially found support was at the one high. Why the one high? Again, because bears, they sold, they scaled in, they made money. 20, an inside bar, a high 1, but not really that good. Because of the wedge and because of how big bar 19 is, I would expect we get at least 2 legs sideways to down. 21, bad follow through for the high 1 above 20. Probably buyers below, probably sellers not too far above, and a big outside up bar. 22, follow through for the low 1, but not really that great. Bears need a big surprise if we're going to get a breakout to the downside. This could just be a 2-legged correction. You can see we got buyers at the moving average. We got buyers at the moving average. So, this could just be a big 2-legged correction. We could get a second leg up from how sharp this was. We might have to test this close. It's probably going to be an obvious magnet. And then you get 23, an outside up bar, but a tail on top, not really as good as it could be. 24, a bear bar, disappointing for the bulls. They were hoping that this was essentially a big high 2 and they could buy above here and the bull trend would resume. But the pullback was relatively large. It was a lot larger than you want it to be. So I suspect the market would have had to go more sideways to down first if we were going to get that sort of rally. 23 closed pretty high in the range, so not ideal for the bulls. 24, a bear bar closing kind of near its low, but not above the moving average. Consecutive bear bars, 25. Good follow through for the bears, but I don't really want to sell here. I think I would just rather let it go without me. 26, a big bear bar, but a giant tail on the bottom. There were buyers at the bottom of the buy climax, which was essentially the 11 low, right? You can see there were buyers at the 11 high testing the breakout point during 25, but there were buyers at the 11 low, limit order bulls buying here, ready to scale in. And you can see they made a quick scalp, getting the bounce on 26. 27, an inside bar, but I'm not buying above 27. It's arguably a big high 3, but after 4 straight bars, I don't want to buy. It's an inside bar, a low 1. I don't really want to sell it, though. It's a doji bar. 28, big tail on the bottom. I don't think that great. I think totally reasonable to just miss this sell-off. It's a tight channel down, and you could sell the market. We have 6 straight bear bars, so it's probably okay to just sell the market, but I think it's really difficult when you're this low in a trading range. We still haven't broken out of the 18-bar range yet, so we probably are going to have to do that. 30, it's the first bull close in 7 bars, so I don't really want to buy it. I think it's better to be flat. 31, an inside bar, probably buyers below, probably sellers above. You can see we did find sellers above, but we were in a decently tight micro channel, so you would expect there were going to be sellers above the first bar, regardless if it was a bear or a bull bar. 33 essentially triggered the low 1 below 32, but really not all that great. You can see that if we closed on its low, it would have been better, possibly back to clearly always short for the bears, but really wasn't able to. 34, an inside bar. It's arguably a breakout pullback, but really not all that good. Traders are waiting for something really strong for the bears. They're waiting for one side to make a statement, either some sort of strong reversal up or some sort of strong follow through down. I think ideally for the bears, they'd like to see a pullback and then look for some, in the market to not go clearly always in long, and then look for some sort of good bear bar to sell. 35 breaks out to the downside of the 18-bar range, and then essentially we find buyers. So traders break out to the downside of the 18-bar range on 35, disappointment, and we get a huge bull bar 36. Failed breakout of the 18-bar range, double bottom bar 3. Potential for a swing up here, but we need good follow through, and we did get good follow through on 37. I think that decreased the odds. 37 closed above the moving average and on its high, and I thought that was really important. Yes, it was consecutive bull bars, which is obviously really important, but the bear channel down was relatively tight. The bears were hoping that we were going to go, not really quite get always in long, and we were going to mostly stay always in short and they get some sort of reversal down. Kind of like 1 and 2, we were kind of still always in short in here the whole time, and then they were hoping for the breakout down, but instead we got this. Kind of, I think, the same thing here. They knew we were probably going to get a pullback to the moving average, but 37 is really disappointing because it makes the market always in long. Instead, they wanted to see some sort of weak bar and then a bear bar closing near its low, so it never clearly goes always in long, but I think it did here. 30, 38, disappointing follow through. This was a pretty tight channel, so it might need a second leg down. Big bull bar 39, but a tail on the top. And then we got an inside pattern 40, 41. Again, this triangle on a lower time frame or on a higher time frame, probably an inside pattern. This whole big triangle on the daily chart, an inside pattern. So you see II, just think triangle. II 40, 41, it's a triangle. Breakout above the triangle at 42, 50-50 chance it succeeds, but it's a third leg up in a trading range, 37, 39, 42. So probably not as good as it could be. Sorry. 43, a bear bar closing near its low. Am I selling 43? Nope. It's a, 1, 2, 3, 4, 5, 6, 7. 7 or 8 bar bull micro channel. We haven't traded below a bar in that long. This is a good tight channel up. This does deserve a second leg, but it's probably a minor reversal. 43. Follow through 44, but not really as good as it could be. Follow through 45, but still big tails on both sides, and disappointment on 46, big tail on the bottom. 47, a bull bar, but a tail on the bottom, a tail on the top, not as good as it could be, and a good follow through bar on 48, but again, a big tail on the bottom. What does 48 tell you? Well, any of the bears who were interested in selling in here were disappointed in 47, and they got out during 48, causing the rally. Am I buying above 48? I don't think so. I think after this, we're probably going to get a second leg down, and it was a wedge essentially, so probably 2 legs sideways to down anyways. You could argue the tail on 48 is that leg down, but if it is, let's see a follow through bar on 49, and we don't get it. 49, a bear bar closing near its low. It's a double top, lower high. We could be reaching the apex of this triangle. I'd rather not sell. I'd rather wait. And you can see 50, not quite the follow through you want. 51, not quite the follow through you want. 52, again, not really what you want. It's okay to miss, I think it's okay to miss this and just wait to see if we get a big bear bar closing near its low. Stop, one of the keys, I think, to a lot of the always in trading is stop trying to get in, hoping the market's going to become something, and get in when it has become something, when you get, that strong bar that you're looking for. Okay to miss this looking for a strong bar. I think okay to miss these looking for strong bars and you don't get them. 53, always in bears are going to exit above 53. It's a 2-legged pullback from this spike. Maybe we're going to get a second leg up, but I think after 4 straight bear bars, hard to buy above 53, but always in bears will exit. Follow through 54 and disappointment 55. See open gap with the 52 high, the bears who sold above 52, still scaled in, still not out yet. 56, a bull bar closing on its high. Can you buy above 56? I actually thought 56 was fine. The market was probably always in short, or it's probably always in long through here. And you could argue we briefly flipped always in short after 4 bars, or we maybe briefly flipped always in short somewhere in here. But it really was never all that clearly always in short versus here, we were definitely always in long. And then you can see definitely always in long, pullback, and a bull bar closing near its high. So I thought okay to buy, taking a chance that we get some sort of rally. The problem is we're in a big triangle, so we're probably going to get a lower high. So I think that was the issue with the trade, but probably okay to buy above 56. Disappointment 57. Traders initially bought the 50% of pullback, causing 57 to bounce. And you can see, what do you want if you bought above 56 during 58? You want to see the bulls who bought above 50, 56. Maybe they're disappointed in 57, but they're scaling in. And then when 58 starts to race up, what do you want them to do? You want them to buy more, and you want to see a big bull bar here. The bulls say, I think I'm correct. 57 was a breakout pullback, but I think I'm still correct. And instead, the bulls who bought here disappointed this. A lot of them got out, and that's what caused the sell-off here. And then a lot of them were disappointed, and they dumped their long, causing 59. So not as good, not as ideal, I don't think. 60, a big bull bar, but we raced up to here and ended up finding sellers. There were buyers below 55 and 56, the buy climax low, and you can see they got out. 61, I'm not selling. It's potentially, 3 leg down or something, and bad follow through. 62, an inside bar 63, potential wedge, but really I would rather wait. And then 64, an outside up bar. You can probably buy above 64, but it's on a flat moving average in the middle of a trading range, which is a big problem. If you go for 2 to 1, definitely a 40% chance we get up here, but that's the top of the sell climax. So a reasonable magnet, but I just think that that's a rather, it's a big bar, so big risk. And so what do traders do when there's a big bar and big risk? They instead will buy the 50% pullback like they do during 64. Or so like they buy the 50% pullback of 64 during 65. And, 66, a bull bar closing near its high. We might start to rally. I thought it was relatively reasonable to think we were going to start to rally, but instead you get disappointment 67. Bulls probably exit, and then buyers below 68. Sellers above 68 during 69, and we go sideways. Surprise bar 72. I think okay to buy above 72 as well, taking a chance that we rally. Maybe I'm wrong about all this stuff, but I thought 72 reasonable swing buy, and you get good follow through 73, but then disappointment 74. Huge disappointment. And if you're fast to get out during 74, good for you. But I think okay to exit. Maybe below 74, but it's just a lot of points to give up. It's a trading range, so a lot of times you're going to get that disappointing follow through, like 70, 74. But bulls were hoping 72, 73 was going to be the breakout of the trading range. Reasonable enough chance it was going to succeed, I think, to hold long. And instead, you get disappointment 74, 75. Good enough for a second leg down, probably going not too much lower, not too much higher. And we oscillated sideways for the rest of the day. 78 is probably a high one. I wouldn't do anything. For me, I did buy 72 and I got out like somewhere in here as this was turning, not turning down, but as it was down here. And I just called it a day. I didn't really want to sell this and try and chase the market down. So big triangle, looking for a breakout over the next day or two. For always in, I thought the best trade of the day, 11, you could probably add above 12. I thought this was the magnet, but we never got there. And then you can see probably okay to buy above 16 as well and just exit below 18. Maybe you sell one of these closes, but I think this is just difficult and I'd rather not. I'd wait for something easier. 37, okay to buy above, I think. But tight channel down, so that's kind of a problem. You might have to be willing to scale in. Probably okay to buy above 41, tight channel and micro channel. And 42, I think it's always in long in a bull bar, but kind of tough. Regardless of where you bought, you get out 43. I thought 56 was fine. And then I would say, maybe 64, maybe 66, but 66 potential second leg trap. So probably better to wait for follow through instead of buying 66. And 72, a big enough surprise. 66 was bigger. It would probably be okay, but I think that may be better to wait till it looks a lot more like a surprise rather than a second leg trap. But I'm not all that sure. And then I think 72 is fine as well. And that's pretty much it. On the daily chart, it's an II. So, I would just be patient and wait for the breakout. It might be tomorrow. I'd imagine it's going to be an attempt tomorrow. And when we get a breakout above this high or below this low, 50% chance it ends up failing. But this is in general, this was a tight trading range, possible final flag. I don't think this is really a final flag. I think it's just a trading range. So I'd expect if a breakout starts to get a little too high, we'll find sellers. A little too low, we'll find buyers. And yeah,